Once again I am here with you with a new video. This video is on cost sheet. So in this video we will see the basics of cost sheet, and in the next video we will take up one practical sums, by which that will be a very comprehensive sum by which you will get to know the entire subject, that is the entire understanding of cost sheet. Starting. So remember, in any organization we are interested to know what is the total cost of a product. We want to know the total cost of a product. With this we add the profit and then we determine what should be the sales value, what will be the sales value. Now for this the management often requires a statement. Management wants that all the information should be there, that what is going to be what is the total cost of a product, okay, whether incurred or estimated. With that management takes a markup or the profit and then determines the sale. So what is that statement which can help us to know what is the cost, profit and sales? So that statement is known as cost sheet. Management is not only interested to know the total cost, but its breakup, how this total cost is broken into the different parts. So that statement which shows the cost of a product or total cost of a product or services, that statement is known as a cost sheet. So it not only shows the total cost but also its breakup or also the components of the cost. So we will see that how a cost sheet is prepared. So a cost sheet is prepared following a format. There is a standard format. The first thing that we write in the, remember any cost has got two parts. Cost has got two parts. One is the direct cost and the other one is the indirect cost. So direct cost is that cost which we can directly associate with a product. That means for manufacturing one product, what is the direct cost, means what is that direct material used. For example, for this pen, how many kgs of plastic was used, how many milliliter of ink was used. So this is your direct cost, but there are some indirect costs which you cannot directly relate to a product. So that is indirect cost, or we call it overhead. This is known as overhead. So a cost sheet will show the direct cost as well as the overhead. So first thing that we write is the direct material. There will be a particulars column. With particulars there will be an amount column, say in rupees or dollars. Another column, this is an inner column and this is an outer column, and this is a particulars column. So first thing we write is a direct material. So what is the direct material that is used? So now we don't have any value, so I am just showing as X. Then we will write direct labor. What is the number or the amount that is paid for the workers or the laborers who are engaged in the production, okay. So we write it here. Then what we do, we add the direct material and direct labor. What we get is known as prime cost. So what is a prime cost? Prime cost is the sum of all the direct cost, and write it in the outer column. With prime cost we add factory overhead. Remember, the word overhead means indirect expenses which is related to factory. So what in the factory, what are the indirect expenses incurred? So I add that. So with this if I add, then I get works cost. This is called works cost or factory cost. Works cost or factory cost. So I write it here. With this I am going to add administrative overhead. After factory, whatever administrative expenses are there, I will add it here, okay. So if I add to this works cost, so I get works cost here. With this works cost I add the administrative overhead. That I get is called cost of production. This is called cost of production. With the cost of production I will add selling and distribution overhead. Selling and distribution overhead. So whatever you have spent on the selling and distribution, like advertisements and etc., I will tell you that we add here. After adding, what we get is known as cost of sales or total cost. Cost of sales, and also known as total cost, which the management is interested to know. So management is interested to know the total cost. So it has originated from different cost components: prime cost, works cost, cost of production, cost of sales or total cost. With this I add a profit. So if I add profit with the cost, I get the sales value. So I get the sales value. So this is the sales. So cost sheet helps us not only to know what is the total cost but its breakup. So this is a cost sheet. Now I am going to tell you two more things which are very important when we do a cost sheet. First, let me explain you that prime cost is a direct cost, which I already told. After prime cost, whatever overhead we are adding is the indirect cost. So all the indirect cost related factory is known as factory overhead. Like in a factory there may be some light, there may be some supervisor, there may be some factory rent. It is indirectly related. So whatever indirect expenses incurred in the factory, we call it factory overhead. Other than this, there may be some administration expenses like salaries of the employees, insurance, etc. So that is administrative overhead. Selling and distribution means when we sell our products, we have to arrange for distribution vans. Distribute our products, we have to arrange distribution vans or delivery vans. So charges for the delivery van is a distribution overhead. We go for advertisement of our product, so that is our selling overhead. So we have to find out which particular expense relates to what. So if it is for the factory, it will become factory overhead. It is relates to sales, it will become selling overhead. Salesman commission, so that will be a selling overhead. Okay, so this way we prepare the cost sheet. Now remember, there may be some other extra information that you have to adjust in the cost sheet. So I am telling you what can be those information. Those information may be relating to, so for example, there may be some opening stock of material and closing stock of material. So when I write direct material, I am writing direct material consumed, how much we have consumed here. So whenever you have opening stock of material and then you add purchases, of material. Suppose I am writing here opening stock, you add purchases, then you less closing stock of material, then what you get is known as, material consumed. This is what you have to write it here. This value you have to write it here. Sometimes in the information, direct material directly is not given. They give you the opening stock of material, they give you the purchases of material, they give you the closing stock of material. So what you have to do is that you have to write opening stock of material, add purchases of material, less closing stock of material. What you get is the material consumed. This is the adjustments that you have to keep in mind. Next, when you add factory overhead, you have added factory overhead you have added. With factory overhead, if you add opening stock of work in progress and you less stock of work in progress. So if you have this information about work in progress opening stock, work in progress closing stock, you have to adjust with the factory overhead, and after adjusting only you get that value, which is known as, this value is known as works cost. So you cannot directly find out works cost if work in progress information is there. You have to adjust it. So this is what you have to keep in mind, this point. Another point, third point, is the cost of production. So you have cost of production here. You have cost of production. This is obtained after adding administrative overhead. With cost of production, you should add opening stock of finished goods and you should less closing stock of finished goods. What you get is known as cost of goods sold. This cost of goods sold should come here, and with this you add the selling and distribution overhead. So remember, after cost of production there will be some space. This space will depend on whether you have the information about finished goods. If there is information about finished goods, add the opening stock less the closing stock, you will get cost of goods sold. With cost of goods sold, you will add selling and distribution overhead. So this is coming here. So these are the 3 points that you have to keep in mind when you are doing cost sheet. Now the last part is that when we prepare cost sheet, there will be some items that we will not consider. Why? Because remember, when we are preparing cost sheet, we have to take that item of cost which are a charge against profit, which reduces our profit. We will not take certain expenditure which are financial in nature. Okay, example are here income tax. This is a financial accounting item. Dividend, underwriting commissions, discount on shares and debentures, goodwill written off, preliminary expenses, cash discount, debenture interest. These are not to be taken into consideration while preparing a cost sheet. So friends, that is all for this video. In the next video, we will take up one practical problem by which we can know this concept in a very clear way. Thank you.